Hello viewers, welcome to Forex Flow weekly analysis for the week of April 6th to 10th. Here on the screen we are looking at Euro USD daily chart. As we are heading into Q2 now, we'll be looking at things a little bit different. As you know, the job numbers came out and we know that there were so many jobless claims filed in the US last week. So in regards to that, I'll be giving an update on the Forex currencies, as well as we'll be looking at gold and WTI. So let's start with the first pair here. Euro USD, we were saying that there is an opportunity that the price may go back down. If it goes down below these moving averages, then it'll go down all the way back to the bottom here. And that's exactly what we have seen. The other scenario was that the price may open with the gap up. And in that case, we were expecting the price would go back up all the way to 114 with extension to 115. So here on Monday, we saw that the price did not open with the gap up, rather it closed a little bit below, and we have seen that this candle broke below on Monday, below the 20-day moving average. So the expectation was the first scenario that the price would head downwards and it'll go down all the way to the bottom, where I put this rectangle from the previous low the last week, and we were saying that the price may bounce from here. So if you had taken a sell position around this area, around 110.50, then this was a very profitable trade and very accurate forecast based on the scenario given, and you should have made about 200 to 300 pips of profit. So here on Friday, we have seen that the price came down all the way here, which was our target. So if you had entered into a sell trade, you could close your trade here, or you could lock your profit at a certain point and wait for the price action on Monday and Tuesday. So what's there for the coming week? We know that the price has bounced a little bit, and if we look into 4 hours chart, we would notice that the price has come down here and now it's heading upward a little bit, but this is just part of the profit taking. We are not 100% sure that the price is now going to go up or down. We'll look at this on Monday and Tuesday. Currently the situation is that the USD is very much in demand, and that applies to commodities as well in regards to gold, WTI, as well as other currencies with US pair. Millions of jobless claims were filed here in the US, and there is a sentiment of fear in the market. So because of that, USD is considered as a safe haven, and people are investing, keeping cash. They are investing into US dollar and taking money out of stocks, commodities, and other currency pairs like euro, pound, and USDCAD. That's the reason why this pair is going down. If there was not a COVID-19 situation or any crisis like this, in normal situation, if you have job numbers like this, then USD becomes very weak and the euro would have gone up. But in this case, it's acting opposite. And the reason is that because people have a fear that the market can get worse and they need to hold the cash, and USD is still considered as safe haven. So the price is going down here now. On Monday, we'll see if the price continues to go down. That's really good for you guys. Whoever enter into a sell trade here, they can lock their profit. If you have not taken your profit, you can certainly extend that. But this is the area between 107.50 and 107. That's the area we have to watch very carefully. If you had taken a sell position, you must close your position there and wait for the price action. If you have already closed your position, or you, let's say you set a stop loss and your stop loss is triggered and you have made some profit, now you can wait for the price action on Monday. We have to see if the price bounces from here. This is not a good indicator right now. It's not considered as a hammer, but we know that the price has bounced a little bit. So on Monday it may come down again, and then we may see it can come down here and then it can go down like this, or it can come down here and bounce upward. So either way, if the price comes down here and bounce, we have to wait for the price to close above the top of this candle here. So I'm going to put this line. This will tell you exactly if on Monday or Tuesday we see that the price is bouncing and it closed above this level, which is currently at 108.65. I would say wait for the price to go up to 108.80 or 90, or even close at 109. That would be a bullish indicator, and in that case the price will head upwards, and we'll wait for the price to go upward. If the price breaks above these moving averages around 110, then the price will go all the way up here to 112, which is the second orange line here you can see, and that's where we'll be taking our profit. First profit target would be around 112. If the price is goes sideways or it's rejected from these moving averages, then we'll close our trades with small profit. This is the key here. We have to enter into a buy trade if the price goes above this level of 108.65 on Monday or Tuesday. If the price continues to go sideways here or goes downward, then I would not recommend you to enter into a buy trade. If you are a seller, you can close it, close your sell trade, take your profit, or wait for the price to go further down. And then we'll reanalyze this pair next week to see if the price will go all the way down here to 106.50 and then bounce from there, or how it's going to react in the coming days based on the situation in the US. So currently this pair is in downtrend. People are investing into USD, but there is an opportunity if the price closes above this level, then you can enter into a buy trade. That's for Euro USD. Now we're looking at Pound USD. Here the same situation. The week ended here last week, and we were saying that the price may go all the way back up to 127. That did not happen because of, for the same reason, the jobless claims and the job numbers that came on Friday. We know that the USD is in more demand, and that's what we have seen here. The price has done very little movements here, so this was really not a good trade setup for long-term traders. If you had taken a buy position here, this is the time to close and take your profit, because this pair can head downward very quickly. As you know, USD is in demand. So on Monday and Tuesday, you can see that if the price closes below the bottom of this candle, which is at 122, you can enter into a sell trade, and in that case we'll be expecting the price to go down to 120 initially with extension to 118, and that would be another 300 to 400 pips of opportunity that we can easily take profit on. Now the other scenario is if the price does not break below this bottom of this candle, which is 122, then the price can go sideways like this in the coming week, and then we'll reanalyze this pair. Based on the current situation, we don't expect this pair to go up unless there is a less fear in the market and the pressure is released from the USD. Then in that case, people will start buying other currencies like pound and euro, and in that case we'll expect this pair to go up. But for now, the expectation is it'll go sideways, or it will, if it breaks below this level, then it'll go down to 120 with extension to 118. That's for pound USD. Now we are looking at USDCAD. Here we were saying that the price is going to fluctuate between these two orange lines, and we were going to watch very closely the oil price as well as the US index. And in that case, what we have noticed that although the oil price was bounced in last couple of days 20 to 25%, but it's still very low as compared to when the USD price was around 1.34 to 1.35. So based on the current price, we can expect that as the oil price will continue to rise up, this pair will go down. But at the same time, if the USD is in more demand and USD is getting stronger and stronger, then in that case it will not be able to go down very quickly, although we have seen that it's going a little bit sideways. But with a lot of pressure on USD, people are buying. This pair can go back up again, even though the oil price goes up above 30 to up to 35. So in that case, we'll be looking forward to these two indicators very closely, and we'll watch the oil price as well as USD index and see how we can balance them to make sure which direction this pair will be heading in the coming weeks. Right now, I would say if you are not a buyer or seller, stay away from this pair. This is not a very attractive trade setup. But if you were a seller around here on the top when I gave signal, you can certainly close your position and take your profit. If you are a buyer around at the bottom here, I would say lock your profit and wait for the price action on Monday or Tuesday, and watch very carefully how this pair reacts next week. Now we're looking at gold. Here the situation is that we were saying that the price may bounce from here, from these levels of moving averages, and that would be the area we'll enter into a buy trade. So the expectation was that the price would continue to go up here, but since we know that there was a lot of pressure on the USD side, and people were buying and selling gold and buying USD, so this pair has gone up. Or maybe it's because of the profit taking that happened. A lot of buying happened around here, this area, when I gave signal that the price, if the price bounced from 1470, you can enter into a buy trade. So as you can see, the price has gone up almost 200 points, and this could be a profit taken here. But now again we are seeing that the price is heading upward. So in that case, if you are a buyer, you can hold your position and lock your profit. If you are a seller around this area, you can certainly close your position, because it can go further up, and this leg can go up. It can make a wave like ABC, and then it can go up here. In this case, we know that the price has come down here, then it has gone up here, then it came down here. So the next leg can go up here very easily, and in that case the price can reach to the top from where it came from initially. So this was the previous top around 1692, or all the way up to here 1700. We don't expect the price to go up. I'm going to put this orange line here. So if the price breaks above this level of 1650, then this pair can go up here, and at that point we'll reanalyze that for a sell opportunity around 1700. But if it continues to go sideways here, then I would say stay away from it and wait how these moving averages are catching up with the price. If it goes up or below, the price may be rejected from 1650. In that case, we'll be entering into a sell trade, and that would be very interesting setup. We'll be looking at two tops, and that would make some kind of M pattern that we have discussed in the past, that this pair can come up here, and then from here it can go down like this, and we can see that M pattern is formed. So that would be another great opportunity to enter into a sell trade and make a lot of profit. So we'll be watching very carefully here. If the price is rejected around 1650 with the huge red candle or inverted hammer, then we can enter into a sell trade. If the price breaks above that, then we'll be looking forward to 1700, and we'll watch for the opportunity to enter into a sell trade there. Now we are looking at crude oil. Here I was given signal that if the price dips below 20, then we'll enter into a buy trade. And that's exactly what we have seen here. The price has dipped below, went down to 1927. That was the lowest price here last week. So this was the opportunity to enter into a buy trade, and that was my signal. And if you had taken that buy trade, you should be having a lot of profit in your accounts right now, because this pair is heading upward, and we know that it had bottomed out here around 20 or 19 dollars a barrel, and now it's around $29 a barrel. So that was great opportunity to make about 1,000 pips, and I hope you guys were able to take advantage of the forecast given. Now for the coming week, what we can see that the price may continue to go up based on the outcome of the meeting. We have to see how OPEC and other countries are doing production cut. In that case, the price will continue to rise up, and our target would be around $35 a barrel. So if you had taken a buy position here, I would say lock your profit, let the price go up. We'll be initially looking forward to $32 a barrel in the coming week, with extension to 35, and that's where we'll close our buy trades and take the profit as this moving average is coming down. And we'll see the situation if the oil is still not in demand in the coming weeks, as we can expect that, and the production cuts are not done, then this pair will go down and we'll enter into a sell trade in that case. And we'll be looking forward to a sell position around 32 or $35 a barrel. That's for crude oil. With that, I'm going to close. Thank you very much for watching. Do subscribe to my channel and hit the bell icon so you can continue to get these videos, and leave your feedback in the comment section.